Welcome to Trading Nation. I'm Brian Sullivan, and we're joined now by David Tice, former manager of the Prudent Bear Fund, a man who has been known for his negative calls. David, first off, welcome. It's good to see you again. I know you sold your business. You kind of just went and did what people do. I'm sure you've got money to last you a lifetime. I want to ask you, why come back into the market game now?
Well, you know, what's interesting, Brian, is the market has tended to go down about every 7 years. Really, it went down in 87 and 94 and 01 and 08. So it seems like 15, 16, 17. And I'm a big Austrian school thinker, and we cleanse excesses. And during these periods, you know, after the decline, I mean, it rallies like crazy. But now bad things are about to happen again. I think the market's going to go down, the VIX is going to go up, and gold's going to go up.
Why? What's the catalyst?
Well, the catalyst is we're 93 months into an economic recovery. We have the Fed starting to tighten. We have banks actually starting to tighten. C&I loan growth is declining a lot, the most since '07. And it's tough to be tightening at the same time that you're 93 months into an economy, economic expansion, and it's likely to, and when the economy is not doing very well already.
Listen, I'm going to ask you a question, David, that you've heard me ask, by the way, many times over the past number of years. Are you worried that you're just going to be too early? You've been right, but you've been wrong. Some of your wrong calls were just early. Like, what time frames are we talking about here?
Well, the bears are always early, and I've certainly always been early. And
you've taken your lumps for it. You've taken your lumps for it.
Yeah, exactly. The policymakers end up doing what they think is right in order to kick the can down the road. However, now we have so many issues. I mean, it's been pointed out by Van Hoyzenten about how the last 14 tightening cycles, 80% of them ended in a recession. Actually, the last 10 ended up with a financial crisis. So those are not really good odds. And we've already had GDP growth fall to 0.7%, even though we had a good jobs number this morning. You look at the average for the last 2 or 3 months is not very good. And we have the spectra of China and their credit situation. We have this geopolitical mess, and you have the VIX below 10, you know, for a couple days. You know, that's just not a good recipe.
What's the risk to your negative thesis? What could make you bullish? I know. You know, at the Prudent Bear Fund, the goal of your fund was obviously that the investing idea around it was that things would largely turn down. Although you did buy things like gold, what would flip you around and say, you know what, I have to be bullish now?
Well, one thing that Mnuchin is certainly hoping for, and Trump, is a tax bill, getting that through. And Larry Lindsey, who I greatly respect, has talked about the fact that if we end up favoring equity investment over debt, we end up having a border-adjusted tax system, we end up being very incentive-oriented. You know, that could get people excited for a while. However, I still think that's going to be very, very tough because there's a lot of Republicans that are still going to demand revenue neutrality. It's not going to be easy. But from the market where it is, it's just, I'm not going to be very bullish. I mean, I think it could last for a while. However, there is going to be a decline. I mean, people have to sleep. I believe in cycles.
Well, so that said then, if our viewers of this segment listen to what you're saying, believe in what you're saying, and want to invest around it, what do you do? How do you make money in a market that you see dropping?
Well, I think you do have to be careful. I think you should own gold stocks even over bullion. I think gold stocks had a dramatic decline over 3 years, and they're still priced very, very well compared to the bullion. We have competitive currency wars around the world. No one wants to see their currency escalate. Donald Trump even talked about the fact that he doesn't really want to see the stronger dollar. Gold is the one currency that doesn't have a constituency against debasement. And therefore, gold is going to do very, very well, in my opinion. Frankly, it's hard to hear me say this, but Bitcoin actually makes a lot of sense. Bitcoin's
Bitcoin.
been looked on as a fraud, as a fad, et
You're a
cetera.
fan of
But
Bitcoin?
I'm actually, you know,
Are you an owner of Bitcoin?
pragmatic.
You mining it?
Pardon me?
Are you mining
No, I'm not
it?
mining it. I'm not mining it, but it truly is a competitor to debased currency, and it makes a lot of sense just from a transactional basis, even if it
Wow.
takes a small share. And people are going to make money in Bitcoin. You know, I'm a little bit worried about, you know, some of the speculation there, but it's still relatively young in its life history. But I like gold, and gold miners even better.
All right, gold miners, and even Bitcoin. David Tice with a rather surprising return, I guess. Hey, David, it's good to see you again. It's been a long time. Don't be a stranger.
Okay, thank you very much, Brian.
All right, David Tice, formerly the Prudent Bear Fund, likes Bitcoin. There's your headline. I'm Brian Sullivan. Thanks for watching Trading Nation. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.